Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello. Good morning, everyone. If you can hear me, see me, say hello. Let me just make a quick adjustment here if you don't mind. Okay, that looks good to me. Hi, everyone. If you can hear me, see me, say hello, give me a thumbs up. The markets are rocking and rolling this morning, and we have a lot to talk about. But, let's say hello first. Give me a sound check. Good morning, Oli from Dubai. Peter, good morning. I'm actually going to be in Dubai in just a couple of weeks for IFX Expo. Hopefully you're going to come join us because they have this amazing Traders Festival that they just started. So it's going to be some really unique events catered to traders. So join me at IFX. It's completely free. Good morning, Yusufin. Good morning from Oregon, Bob. Hello, everyone. All right. It sounds like everyone is coming in, and I hope everyone had a nice weekend. It's certainly been a pretty crazy one. Even though I didn't stream yesterday, you saw all the videos I put out, right? About funding ticks and Greenland and the EU and tariffs, and actually not being in the markets, not streaming yesterday, gave me a really good opportunity to do all that for you, because the markets, they kicked off with some pretty crazy volatility, and many of you have questions about that. So we're going to talk about, not just what's happening in terms of the Greenland tariffs, but also what's happening in Japan and the spike in yields there. This is a busy trading week. And last week I said, there's not much in the way of US data, but that doesn't mean that it's not going to be a busy week, because headlines has really been what's driven market flows. And that's proved to be the case as well. So starting off, it is definitely a headline driven market. We'll look at the charts in just a second. But for those of you that do not know, the Supreme Court, it's decision day today for Supreme Court. They usually start making the decisions and announcements, or what they made a decision on, at 10 a.m. Eastern time. So that's in just about an hour. There's certainly two things that the market cares about, which is number one, whether or not the Supreme Court makes a decision on the tariffs. I want to hear what you think. If you've joined these sessions before, you will know that I love interaction. Do you think we're going to get a SCOTUS decision on tariffs today? Say yes or no. I want to poll you guys. Yes, Lisa Cook is the other big topic, which we'll talk about in a moment. But who thinks we're going to get a tariff decision from SCOTUS today? Glad says no. Anybody else? Come on, I know you guys have an opinion. Do you think we're going to get a SCOTUS decision today? SCOTUS decision would be a pretty big deal because we talked about how when the market is surprised and something unexpected happens, that's when we have the biggest movements. And Peter says, "I pass on a decision." I mean, you don't want to contribute. You don't have no idea. I mean, that's a good stance. Yusuf says yes. Okay, first off, as I said, if SCOTUS does make a decision, it would be a big deal because if they deemed the tariffs illegal, then that would probably lend support to stocks because it means that there's relief in sight, whether or not it's challenged by the Trump administration, and that maybe the tariffs on EU won't go through. The pain in the markets that we are seeing today is due to the threat of fresh 10% tariffs on a number of EU nations. So if SCOTUS, Supreme Court, votes that the tariffs are illegal, that should be positive for stocks. Now, it probably won't last for long because there's so much that the market is reeling over and Greenland and things like that. But it does give, a challenge to Trump and give the market a little bit of relief that that could potentially not happen. And it will certainly, in my opinion, cause a knee-jerk rally in stocks. And that's what you need to be prepared for. One of the big reasons why it's so important to attend the front of the week, usually on Monday, our streams, is because it's important. The markets reward the prepared. That's what I always say. And, I warned about how Greenland could be the next big macro trade 2 weeks ago. That's happening right now. If SCOTUS makes a decision and says that the tariffs are illegal, that will cause a knee-jerk rally in stocks and a pullback in gold. So you need to be prepared, regardless of whether it's going to happen. I don't think it's going to happen, but you need to know if it does, this is going to be the market impact.
Okay, I just want to pop in for one more macro bomb that's happening today. Is the JGB market is blowing up. It broke
We're going to talk about that.
And that actually could be, I think, in many ways, the most important one. So I'm just going to let you talk about it, but I just want to put that
Yeah, absolutely. That's what I said earlier. We're going to talk about Japan as well, even though no one's watching Japan. But the other SCOTUS decision is exactly what Glad pointed out. Is Lisa Cook. Whether or not Trump's decision to fire Lisa Cook is legit or not, it's not going to have as much impact as the tariffs. But the possibility of the administration having being able to push out and influencing monetary policy is what we kicked off the year with, right? In terms of Powell and the criminal investigation. So if they vote that she could be kicked out, that would certainly undermine Powell and that investigation and, hurt the markets. If they say, she can keep her job and he has no jurisdiction on this, this would probably end up being positive for the markets. All right, what are you guys saying? Why would Trump threaten tariffs if the Supreme Court is going to deny him? Good question, right? I mean, I don't attempt to understand anything he does, my friend. I don't attempt to understand anything he says or does. And so I don't think he even cares because honestly, they have a backup plan. They, made it clear they have a backup plan on how make these tariffs come through anyway. And that is why the SCOTUS decision is not going to be the end all and be all for tariffs. We're not going to see the Supreme Court decide and the market soar because it means that tariffs are over. And, that could be the reason. All right, what is Chuck asking? Don't tariffs take away pricing power from corporations? Can they rule that previous tariffs can stand and not be unwound, but going forward, they must have congressional approval? Yes, they could certainly decide on that. And that could be one of the options. And, the markets wouldn't be as happy with that for sure. But going forward, that could influence what happens on February 1st, right? I mean, it's a moving target, right? Because right now tariffs are so hot that it's whether or not they have the balls to make the decision right now. Because the tariff decision right now would directly affect the tariff threat that just happened, or they want to maybe let the Feb 1 tariffs kick in and then do exactly what Chuck suggests could be possible. The rule that previous tariffs can stand, including the 10%, and then unwind them going forward, and say that going forward they need congressional approval. So, it's whether or not SCOTUS has the balls to make a decision today. I think, and many of you seem to think, that it's no. So therefore, it'll probably be a whole lot of nothing. Today will pass, but 10 a.m. is really the focus. Okay. So that is SCOTUS. Of course, that is not the biggest story impacting the markets. Let me share with you my screen. We're going to talk through the price action. We're going to talk through what matters. Give me 1 second to do so, and pull up my charts and share with you my screen. Okay, hold on. I just need to organize everything here. Okay, plus share screen. Okay, I'm going to share my entire screen, and we're going to pull up the charts right here. Okay. All right. I don't even know what it wants me to do. This is so annoying because, hold on 1 second. All right. Hold on. Boris, I'm going to pop you on here. I'm going to read what.
Hey, okay. Hi, guys. Kay needs to just verify her trading view status. Good morning, everybody. I just want to give you a preview of what's coming as far as trading goes. Super, super cool stuff. I'm going to share with you the ideal bet size for our trades, which is going to be super interesting for you. I've been doing this all holiday long and killing it as far as scalp goes. And I think you guys are going to really, really like it. But I don't want to kind of reveal this right now, but just trust me on this, that it's going to be a super cool new twist to our strategy. As far as bet size goes, it's going to make all the difference in the world of getting you towards the prop. Kay, how you doing? Are you still working on the thing? Or I guess you're still working on the thing.
Maybe you want to share them a little bit about Prop Trader Fest this Saturday?
Yes, sure. Let's do that. Let's talk about, let me share my screen with you guys. Hang on a second. Because this is those of you guys who have not signed up. Hang on, let me just do this. Share my screen. Share screen. Window this. Share. Okay, awesome. So you guys can see the Prop Trader Fest. Let me put the link in here. If you have not registered, please do so. How many of you have not registered? Say no. Who are seeing this in time. Fill this out, press it in, and you're going to get access to an unbelievable show. 22 speakers. I'm setting up all of these guys this week. As far as conversations goes, it's not just the speakers. So some of these people are like multi-million-dollar payouts. Some of these guys you know very well, like Trader Nick, who's a buddy of ours. Austin, who's a buddy of ours. Big Daddy Max is having a big show in Hollywood the week after. Some of you may have seen Tyler, who's had huge payouts. Nick, who's had huge payouts. James also has got great big payouts. But that's not the only thing that we're going to have at the show. The show is going to focus on 4 of the most common, effective trading strategies that people use in prop. ORB, opening range breakout, FVG, fair value gap, ICT in general, and my buddy Austin
teaching VWAP, right?
Yes, with VWAP, which I can never say properly. So I made this joke before, by the way. This is like, if you're a native Russian speaker, right? Doesn't matter how perfect your English is, the word VWAP is impossible to produce, is impossible for you to say unless you say it super slow. Because it's the combination of V and W, which is so hard for the Russian speakers to say super fast. So that's how you know I'm a spy, because I can't say VWAP properly. Anyways, Austin is going to talk about that, which is really, really, really cool. And Zamco, of course, $1 million payouts. I'm going to be talking to them a little bit later today. That's going to be fascinating. So the point is, it's going to be an incredible show. We're going to do like 5 hours of content. Everything is going to be videotaped. It's just $10 to get the videotapes, and all of that money is going to Children's Hospital St. Joseph Children's Hospital and to the vets. We've raised already several $1,000s for that, which is great. And I'm super happy that everybody is coming in. So it's just going to be a really, really good content. You get a chance to post your questions, which we'll see if we can get as many questions as we can answer for you guys. But the bottom line is, should be a really, really great show. And of course, it's 100,002,300% free. It's totally free. So it's really just been Kathy's labor of love. So please, please, please attend. And more importantly, attend with your friend, because the other thing that's happening that's going to be really, really cool is all the prop firms have been super kind and have really pitched in more than $5 million of free evals. Not like one or two. We're not going to give away one or two accounts. There's literally 60 accounts up for grabs for free evals from all these various brokers that are going to be there. All the various prop firms, some of whom are also brokers too, who are all going to be there. So absolutely, come in, enter the raffle, do all the cool things. I'll put the raffle link in there as well for you guys in the thing. But most importantly, just register. It'll be really, really good.
Yes. And like Boris said, we want to make this a success so that we can do this again. So please help us, tell your trading community about this. If you can go to the top of the site, proptraderfest.com, and sign up. It's completely free.
Yeah. If you guys are sitting in your trading discords, and I know half of you guys are sitting in various different discords, this is totally free. Give away this link. It's all about freedom here. So there's nothing proprietary. Nobody needs to do anything. You give away this link to every trader because we want as many of them here as possible so they can have a good time.
Big Daddy Max, as Boris said, Max has an event this next weekend. He's charging $600 and $100 a person for a regular ticket, $15,000 for a VIP ticket. He's sold out. You'll hear from him completely free on Saturday. All right, so I finally got my trading view working, which was really bizarre because it's not as if I didn't turn on my screen this morning. I had my trading view on my other computer. It didn't ask me this question. So it was only because I restarted this one that it asked me. But anyway, let's cut to the chase. You can see big moves in the market today. Stock futures down more than 1.5% across the board, 700-point drop in Dow futures. We might even see 1,000-point drop. Many of you don't remember those 1,000-point days in the markets, but they could be back. We have gold soaring to fresh record highs, 5,000. If nothing changes and they just worsen, 5,000 is going to be the next step. What's really interesting is that Forex hasn't seen major movements. Dollar yen, it's down marginally. The only currency that's kind of up, but it's not up, in excess of percent is euro. And one of the questions that someone asked earlier is, why is the euro up? Why is the dollar down? Isn't this supposed to be about the need for safe haven? Because, we're seeing gold rally, we're seeing silver rally, and, shouldn't the US dollar be a safe haven asset? And the answer is not if the trouble is being caused by the US. Basically, the dollar is being punished because, the administration is causing all this havoc. In fact, this is exactly what we saw on Liberation Day. April, I think it was like 2nd or something like that. Let's go to Liberation Day. This was Liberation Day, this period right here. Can I get a circle going here? Let's see. Yes. So this was Liberation Day. We're going to write this. April, Liberation Day. This is the euro dollar that we're looking at. And, take a look. Even though you think tariffs are supposed to be negative for other currencies and positive for the dollar, and people would, flock into the safety of the dollar in times of anxiety, what happened around Liberation Day? The market, and we saw this multiple times last year, whenever we had tariff headlines, it always drove the US dollar lower, not higher. And so as a result, you're seeing the move in the euro consistent with the move back in April. And that's why I always say it's very important to be prepared and to look, to come to these sessions, because we explain to you, why this is happening. We show you examples of it being the same type of movement in history. So you can see this lasted for a very huge move in the euro, 108.50 to 115.75. So that's basically 600 points in a matter of, this looks like 2 or 3 weeks. Euro was falling. Now it's beginning to rally. And yes, as one of our friends here pointed out, this is consistent, not consistent, depending upon how you look at it, with U.S. bond yields, because U.S. Treasury yields, they are up a lot today. U.S. Treasury yields, 10-year Treasury yields are at the highest level since August of last year. And this is a reflection. Let's write this down so we get this, all right? Jump in Treasury yields is a reflection of people dumping U.S. Treasuries. Dumping U.S. Treasuries because they question, because first of all, maybe they just don't want to be exposed to U.S. assets. Secondly, they question the decisions the administration is making. They are worried. They want to seek safety. They're putting the money, taking the money out of bonds, and they think maybe, and putting their money into other, like the metals, and also maybe there could be tariffs are inflationary. I know that the data hasn't necessarily shown that in the past, but they could be worried about inflation. And so they're driving yields up a little bit. And they could be thinking that this could prevent the Fed from cutting interest rates if it's inflationary. But this is also very important. Boris mentioned that yields, we got to talk about the yields in Japan, but we also have to talk about the yields in the U.S. The yields in the U.S. are also very, very worrisome, because what does Trump want? What's the number one thing that Trump wants? I laugh at that, because there's not just one thing. What do you think Trump wants? There's so many things he wants, but one of the main things he wants is lower interest rates. So he is 100% not going to be happy with this move here. And so he's not going to be happy with this move here. And so he's going to be watching it. If yields get higher, he's going to be maybe walking things back. I mean, basically, there's two things he wants. He wants interest rates to come down, and he wants stocks to be strong. And so these are, the two big things that he wants. And in many ways, the two things that he kind of measures his self-worth on. Now, when it comes to stocks, though, we're still at really relatively lofty levels. So even if they pull back, I don't think he's going to be super concerned if he can kind of stabilize them somewhere around here, because, pullbacks are natural. We've come from very elevated levels. If they pull back here, he'll probably tell his buddies to buy more, and, he'll drive it up. So I don't think that the stock issue right now is as alarming. Even, when it comes down here, then it's going to be a little bit more of a problem. But the yield situation, it's not like, we're down here. We're already up over here. And so he's definitely is not going to want, he's going to be pretty PO'd if yields get up to 4.5%. Now, of course, that's pretty far from right now. 4.3 to 4.5 still is kind of far, but this is when it becomes a huge problem for him. And maybe this is when he starts to walk things back. I don't know. I've told you time and again that I've stopped trying to predict, what his intentions are. But 4.5% is where I think, where's my horizontal line? 4.5% is where I think he's going to be very worried. And he's going to be very worried if stocks come down to even stocks can come down to, 4,800. I don't think it's, 4,700 is where he's going to start, getting a little bit more anxious. So watch the markets, because in many ways that could be trigger his behavior. Now, I also want to talk about this because this is very important. I put a video out last night on how Europe could respond to this. Europe could, increase tariffs, double digits. They could respond with their own 10% tariff. And all of that, would be symbolically significant. But the only thing that I think would be really, I wouldn't say economically significant, but the one thing that really caused a lot of pain is if they say that they start dumping US Treasuries. The world holds a lot of US Treasuries. China is the biggest holder of US Treasuries. If they say that if they see this as economic blackmail, they have this act called the anti-coercion, I forgot what the I stands for, but ACI. And that is what is the so-called trade bazooka. And that basically will allow them to take severe measures if they feel like they're under economic blackmail. I'm sure every single person in this room agrees with me that that economic blackmail is happening right now. One of the biggest stories this morning is, France 200% tariff on wine, because they refused to join. Macron refused to join the Board of Peace that Trump has put together. All of this is economic blackmail. And so, of course, any action that the EU takes would create self-harm. But, the desperate times calls for desperate measures. Maybe they will resort to this. So the big trade bazooka, EU trade bazooka, the biggest weapon that they have in their arsenal is to sell US Treasuries. And what would that do? That would drive US yields sharply higher, put things kind of in their control. Let's get rid of this. And because yields are up, stocks will crash. Now, of course, stocks in Europe will crash as well. And I am certain, I am pretty certain Trump won't take that lightly. Pretty certain he's going to fight fire with fire, and this is only going to exacerbate things. But this is their trade bazooka. This is something that, you should be worried about. This is something that China also has in their arsenal. If they feel like things, aren't going their way, and, right now there's no, it's really quiet on the China front because they're probably just sitting there watching how everything's playing out, but they could also sell US Treasuries. So the one economic weapon that the rest of the world has is selling US Treasuries. Now, whether or not they decide to do that and they decide to go, to take the most extreme option remains to be seen, because, the stronger sensibilities seem to exist elsewhere. But if they're back to a corner, this could be what their choice is. And so you all need to be prepared for this possibility, because, my job is to make sure that you're prepared for all possibilities, like Greenland becoming the next macro trade, which is unfolding right now. You need to be prepared for the possibility, maybe not the actuality, but perhaps the threat of selling US Treasuries could be enough. They could tease it. They could suggest and see how it goes. See how Trump takes it, to see how the markets take it. Maybe teasing it simply is enough. But that is something that I think that is the biggest weapon in their arsenal economically. And I think that you should be aware of it. Other things they could do, they could prevent visas for Americans traveling to Europe, try to rile up the troops, the Americans, in rejecting, this what's happening right now. All of that is a possibility. All of that has self-inflicted harm as well. But, they're going to have to take a hit if they want this to end.
I'm just going to chime in. They say that they're going to do none of those things, but that's my opinion. I'm on the opposite side of that trade, but I'll leave it to you guys.
You're right.
I think they're in a weak position. They got nothing to negotiate. The only buyer of last resort is us. The Treasury issue with Kathy.
But they never said they wanted to sell it. So, they
what?
They never said the thing is that, yes, the U.S. could buy it, but I think the sheer shock of it will still crush the markets.
No, but I was going to say the Treasury issue, to me, the much bigger concern of Treasury issue is actually Japanese life insurance companies.
Yes, we're going to get to Japan. Don't worry. I know you're all over Japan. We're going to get to Japan in a minute.
I'll leave it be.
Regardless of whether it happens or not, you need to be prepared for this possibility, because it's my job to walk you through all the scenarios and the possibility of the EU selling U.S. treasuries. The Greenland situation isn't going to go away anytime soon. Expect it to remain in the headlines. We'll be continuing to talk about it. Another reason why you need to subscribe to all of our channels to make sure that you are up to date on this. And also come to Prop Trader Fest on Saturday. We will talk about how to trade through these big events. Peter Tuchman, the Einstein of Wall Street, he's 40 years on the New York Stock Exchange floor. I'm sure he's gone through all of this and more. And so, we'll get his insight on all of it. Now, the markets are crashing. Gold is soaring. We talked about treasury yields, and we talked about how it's big in percentage terms, but this is only the beginning of a potential move. I mean, we just started to break down from this consolidation. Even for all of you that look at charts, plenty of move to the downside. I mean, if I look at my moving average clearance charts, and you can see that we're breaking below the 20 SMA, but we got plenty of room to the 50 SMA. Short-term meters are all turning red, which means that it's still very, very bearish. So overall, the general trend has not truly broken. It's still positive on the 50 SMA, 100 SMA, but keep an eye on these short-term measures because they're turning negative. NASDAQ found some support. Look at this. And this is why the meters are so interesting, which is that the NASDAQ, dropped and it found support. No coincidence. Moving averages matter right at the 100-day simple moving average. Short-term meters are turning positive, which means that we could see a bit more of a bounce, probably at, shortly after the open once everything shakes out. So keep an eye. These will change dynamically. Gold, rocking and rolling, green on the screen. And let's see if our EMA meter shows anything different. And for those of you that are wondering, these meters you can get 100% free if you use, provided by our sponsors. If you look at the links and the offers in the description of this YouTube video, and also, in our bio, but green on the screen, SMA, EMA. You can change this to whatever you want, whatever time frame you want. I like to look at the 5-minute chart. I know that Boris likes to look at the 1-minute chart. So let's see if the 1-minute chart is telling us anything different. Let's see, we still have green on the screen, and I changed that to the 1-minute SMA. I wanted to change the chart to the 1-minute. Look how customizable this is. 1 minute SMA is still green on the screen. So you stay long until you start to get this starting to flash a little bit of red. So right now, no stop in gold to 5,000. Gold loves to magnetize towards the round numbers, and 5,000 is the next step for the round number. So keep an eye out for that. Forex, euro dollar, you're starting to see a little bit of a pullback, a little bit of red in the screen. And so, euro could pull back some more, but we looked at how it moved on Liberation Day back in April of last year. And if things progress as they are, the dollar will be punished harder than the euro, even though Europe is the target. Dollar yen, nothing's going on in dollar yen. Nothing's really going on in dollar yen, but a lot is going on in the Japanese markets. Boris is all over Japan, which we'll touch in just a second. But the yen is not the safe haven or the bid or whatever. It's the Swiss franc. People are going into Swiss franc. The Swiss franc dollar Swiss is trading at its lowest level. We've seen dollar Swiss, since September, which is also the lowest level that we've seen dollar Swiss in a very, very long time. The last time it was lower than that was 2011. This actually makes me, I didn't look at Euro Swiss, but look at this. This Euro Swiss, if we look at the weekly, monthly chart, near, a record low. And the SMB is not going to be happy with this. The SMB is going to be watching this very, very closely. Definitely, maybe talking about some interest rate cuts that need to happen if this transpires. But back to the yen. So a couple things happening in Japan right now. First off, number one, the Japanese government announced snap elections in February, and that has been what is part of the reason why the yen is moving. Number two, we have a BOJ rate decision this week. No changes are expected, but they could telegraph something. They're obviously not happy with the weakness of the Japanese yen, but at the same time, their hands are tied. Why are their hands tied? It's just what Boris says, which is that JGB yields. Let's do 10-year first. The big story is let's see, yield. Where is this? All right, let's see what the futures are showing us. Okay, so this shows us where the futures are. Let me see, JGB yields. You know what? I think it's Japan yields. Yes. Okay, long-term government bonds, Japan yields. Oh, that's not what I want. What am I doing right now? Japan yields. I want to show it to you in the best, easiest way possible. Here we go. 10-year JGB yields. 10-year JGB yields is at 2.35%. The highest level that we have seen, and let's hide our meters right now. Highest level that we have seen in 10-year JGB yields ever. And so this is a big deal. Interest rates, while central banks cut and lower interest rates to influence the bonds yields in the market. If the bond yields are already rising, in many ways, the market is already doing the work for them. So the bond yields in Japan are already skyrocketing. So the Bank of Japan, they really can't raise interest rates because what do they want? They certainly don't want this at 2.6%. And so they're basically making things worse, making things tougher for Japanese businesses and consumers by raising interest rates. And that's why their hands are tied. Now, why are Japanese bond yields skyrocketing? Is because prices are collapsing. Prices are collapsing. People, Japanese bonds are, basically being sold, and that meltdown is a result of, fiscal concerns. And that's kind of part of the reason why they have to have snap elections. The 40-year bond yield, which I don't know if we'll do JP40. Let's see if it gives us that. Ooh, look at that. Okay, JP40Y is above. This is the pain threshold, 4%. It jumped above 40% for the 4% for the first time ever. And so basically traders are selling bonds ahead of the election. This is a huge problem for Japan. It is obviously a huge problem for the Nikkei. And this is something, first of all, that will mean that there's zero chance of a BOJ rate hike this week. And then in terms of weakening the yen, strengthening the yen, the yen should be strengthening on this, but it's not, and so that's definitely a problem. Do you want to chime in and add? I'm not sure if I covered exactly what you want to share with the community, Boris, on Japan, but this is a reflection of the snap elections that's happening.
Yeah. So the snap election basically showed that she has enormous confidence in her policy, and her policy is very much Trump version. The Trump economics is based upon weak currency, lots of stimulus, and large export-driven markets. That means that yen immediately weakened. As the yen weakened, that drove JGB rates even higher. A lot of liquidation on there. That in turn now creates a massive problem for Japanese life insurance companies, because Japanese life insurance companies invested a huge amount of their capital in U.S. Treasury yields. But if JGBs are going down, they're going to have to prop those up. It means they're going to have to sell the U.S. Treasuries to come back into the local market. That's the sort of loop that everybody's watching right now as a key control, because Japan is a huge holder of U.S. Treasuries. And that whole, loop, if it gets out of control, up to now, the Bank of Japan has been the lid on JGBs. They've been able to control that market continuously. But if that market begins to run away from them and they lose control of the market, the yields start to really go up. That creates a whole Pandora's box. That's the big macro storm that some of the people that I'm following are watching as a key idea for everybody to keep an eye on.
It's a double-edged sword because one hand, this is a reflection of her fiscal mandate and that she's going to be spending a lot of money. But it's also a reflection of fear, fiscal fears, because spending a lot of money stresses the budget and people are worried about that as well. So regardless, this should not be ignored. This is a big move. 4% is psychologically a huge level. U.S. Treasuries are moving a lot and people are worried. And, you may be trading your NASDAQ, you may be trading your Forex and not really watching the stress in the bond market, but you really should be because it's a pretty big deal because yields are like code says, if stocks are bearish and yields are high, there could be a doom loop that ends up forming.
Almost all equity market crashes are caused by one or two things: bond crashes or currency crashes, right? It's never the economy. It's always the bond market or the currency market that actually drives the equity market. So watch that. That's why it's so important to watch it.
Okay, so what's on the docket this week? Let's take a look at the calendar. The week has obviously already started, right? And so we already had a bunch of data. Inflation gauges in Australia were stronger. Chinese data was mixed. Canadian inflation data was mixed. New Zealand seems to be doing pretty well. The U.S. itself, let's just kind of filter just to the U.S. I mentioned at the beginning of this stream that U.S. doesn't have much data this week. We have Trump speaking tomorrow, so definitely keep an eye out for that. Weekly ADP, nothing meaningful on that front. Thursday, we have the only significant data on the calendar, which is jobless claims, revisions to GDP, personal income, personal spending, PCE deflator. Unfortunately, I don't think any of this is going to affect the Fed's decision to keep interest rates unchanged or cut interest rates in January. Right now, last week, the data wasn't that terrible. Retail sales wasn't bad. The Philly Fed, Empire State wasn't bad. Non-farm payrolls is okay. These numbers will probably show that things aren't all that bad either. The market moves while it could pressure the Fed. I think they may want, I don't think they're going to knee-jerk react to it. Maybe they'll, monitor it a bit and see, obviously we'll have to see how all of this plays out. But, the tariffs don't come into play until February 1st for the EU. So that's after the January meeting. And we all know, if you've been watching this drama unfold during last year, you'll now know that, it could be walked back. There could be negotiations. That date could be pushed. And so the Fed may not want to act preemptively before any of that happens. And so they want to be more reactionary than proactive when it comes to this type of stuff because the consequences are so severe. So the bottom line that I want to make is I don't think that any of this data, I don't think the market moves is going to affect the Fed's decision, which is currently right now, to keep interest rates unchanged in January. And then we have flash PMIs on Friday, not a huge market mover. If we kind of scan to just the top tier events on the calendar this week, we did have jobs numbers from the UK, and jobs numbers were worse, but wages were better. Sterling is up simply because of anti-US dollar flows. This is a big week for UK data. We also have inflation data. We also have retail sales data. And so all of that will be very important. The market does think that the BOE is going to cut interest rates in the next few months. So, so far the data still affirms that. Australian jobs report tomorrow night, really ugly numbers previously, a rebound expected. And then New Zealand inflation data, BOJ rate decision, we already talked about this. Their hands are tied. They have no ability to raise interest rates because yields are up so much already. And then we have PMIs. I love PMIs because they give us the best up-to-date look at how the economy is doing. And so, that is always market moving to watch. Flash PMIs are expected to be stronger for the Eurozone. The ZOO was very, very good. So, and of course, that was taken before all this drama unfolded. But that is probably a reflection of how activity is transpiring. And so these numbers will probably be better for the Eurozone. So these are the most important events to watch. But as you all know, it's not going to be about the headlines. It's going to be, sorry, it's not going to be about the data. It's going to be about the headlines. So make sure you follow up on the headlines on all of this. And, you know, so I want to open up the floor to questions that you may have and remind all of you, please tell your friends, register for our free event, January 24th, happening in 3 days. We want to make this a success so we can do it again. You know, right now it's just on our relationships that we've gotten over 20 speakers, 20 traders to join us for Prop Trader Fest. But in order for them to come again and teach you what they know, we need to make this a success. So please tell your trading communities, go in those Discord channels that you are on, tell them to register for this free event on Saturday. It's going to be incredible. That I can promise you. What version of GDP is the highest market impact? Always the first release, the advanced release of GDP. The revisions almost always have very little market impact. So make sure you are aware of that. Any other questions? Boris is going to roll into live trading at the market open, which is what we always do. And so he'll join us in just a second. Code asks, I read an article that said currencies move based on future expectations. Is that the reason why the euro is so strong? The euro is strong because this is exactly what happened on Liberation Day. The markets see this. Yes, everything moves on future expectations, not what's happening right now, but what they think is happening right now could affect the future. And so they think that, you know, the U.S. is going to cause more trouble and pain. And so investors around the world are going to bail out of U.S. assets. So tariffs are seen as more negative for the dollar than positive. Kiwi and Aussie unusually high for risk off because the dollar is being punished across the board. And that is not just my opinion. That is what happened at the beginning of last year when the market saw tariffs. And we, at the time, I remember we did a lot of graphics on how the tariffs were negative, not positive for the dollar every single time new tariffs were announced. Any other questions? Okay, so make sure all of you register for proptraderfest.com. Most importantly, tell your Discord channels, your friends, so that we can make this Saturday's event a huge success.
All right, guys. Good morning, good morning, good morning, everybody. Are you scalping like a madman like I am today? I hope so. Let me show you my screens. Here we go. Oh, hold on a second. Remove, add to stage. There we go. All right. Good morning, everybody. Hope you guys are having a good day. Let me also change. I want to change my format. Let me see if I can go this way. Wait, hold on a second. Oops. Add to stage. Okay. Let me get rid of this. 1, 2, 3. And let me do one other thing. Put our friends of Apex. Our friends at Apex, 80% off today. Be sure to get the accounts. We're going to do a lot of trading this week. Good morning, good morning, good morning. I have both gold and NAS up. I've been trading like a maniac. I'm going to share with you some very, very cool bet techniques. So this is not a question of signal generation. We're going to talk a little bit about signal generation. I'm going to keep it very, very clean and simple on signals. But we're going to do the secondary part of this, which is how do you do bet management, trade management? And I have an idea that has been working super, super well. And I'm going to run it by you, let you guys decide for yourselves whether you like it or not. So first of all, we're going to just keep things super simple. I have literally, I created like 3 or 4 new trading strategies off the DOTS indicator over the weekend, but we're going to keep it just on the bread and butter scalp strategy, which is we're going to buy the green neons. We're going to sell the red neons across accounts as our pure scalp strategy. If you really, really, really want to be pure in your approach, you can just buy the green neons if they're in trend and not trade any counter trend trades, or sell the red neons if you are in downtrend. Right now, both NAS and gold are uptrends. So green neons is it. That's what we're going to be buying. Okay, so we just signed on a couple of other prop affiliates of ours that take almost everybody. So Ola Prime, which I'm going to be featuring tomorrow, is going to be a good choice for those people that can't take Apex. But today, I really want everybody to focus on Apex. Let me put the Apex logos over there. You can just scan it. But let me also just put the Apex link here in the link. The BK Save is our code. Make sure you use that. All right. Our bread and butter trade is session highs, green neon. We're looking at NASDAQ right now. I am going to go to which account do I want to go to? I'll stay in this account. I'll stay in this 30. I'm staying in the 38 account just to keep you guys simple. Here's what we're going to do. It's going to be very interesting. We're going to do a 2 structure trade. So if this thing stays neon, I'm going to come in with 2 units at market. And then if it retraces 5 points behind me, I'm going to add 1 unit at limit, -5. So imagine it's 235. I'm going to buy two units at 235. And then if it comes back down to 230, I'm going to buy 1 unit at 230. And then average out and blend out my trade. The trade is always going to be 10 points target. Oops, shit, I'm talking. All right, where am I? I'm at 43. Looks like, hold on. I'm sorry, I can't do this. I can't explain and do this at the same time. So I'm in at 43. I'm done. Anyways, whatever. We got done on the 2 lots. Sorry, it's super fast markets. When it's super fast markets like this, it's kind of hard to show it. But the idea is, what I was trying to do is, if this thing slipped below 40, like right now, to 38, I would have been buying a dip and then adjusting my trades and targets. But when it's super fast like this, you just got to go with a fling. The reason why this is the optimal bet size and the optimal bet structure is because when you're trading momentum, let's just take a sort of a 5 continuous green, neon green trades, right? Here's what usually happens. 3 out of those 5 trades, the price just races up to target. Like it just goes up to target, never ever retraces, so on and so forth. So if you try to buy limit, if you try to buy down, you're never going to get it, right? 2 out of those 5 targets, 2 out of those 5 situations, it will retrace down, right? So the reason why you're doing a 2 at market, like a double weighted position at the beginning, is because that is the highest probability position that is just going to run away. Doesn't always happen that way. So that's why you have the limit option to resolve your trade if it comes back down. Now, the nightmare scenario, which happens, of course, at least once out of 5 times, sometimes if you're good, 1 out of 6 times, is that it's just going to blow right through and kill you both. The thing about this, though, is that you're winning 40 if it's just 2 at market. So remember, you're going 2 units. Each unit is going 10 points. Each point is $20. So it's 40. It's a $40 win if you win. If you do a 2 units and a retrace, you're doing essentially also $40 because you're doing $30. The second unit makes $20. You're going 5 plus 10. That gives you $20 on that. And on the first one, you're going 5. No, I'm sorry, it's $40. I'm forgetting my math. You're only making 5 points on your initial 2 unit position. 5 points is $10, but you have 2 units, so it's $20. So now you're making $40 either way. So you're up 40, up 40. If you get blown out of position, the full position costs you, I believe, 140, right? 140. So it's a sort of a 1 to 3 ratio. If you are winning 5-1, 6-1, you're way ahead of the game, right? If you can make it 7-1, you're really printing money. And of course, the essence of doing that is, 1, to be selective in what you're doing. You obviously, you don't want to be doing stupid stuff like trading in front of news and stuff like that. 2 is making sure that you have the proper range overlay. In my settings over here, my range overlay is just 20 points. I'm giving myself 20 points of range in order to give these breakout signals. Probably as New York opens up now, I should expand that range overlay over here to 30 points of range. So that means if the range is less than 30 points, I'm not going to get any signals. The whole idea behind our strategy is range breakout leads to momentum continuation, leads to money. That's what we're betting on. And on gold, my range conditions were 50, which is before the New York Open. I think I could stay at 50 at this point. I'm not going to get crazy. And you can see that in gold, all of the neon red, neon greens, and even the neon reds kind of work on a continuation basis. And we can trade gold right now as a breakout strategy. Now with gold, this is the interesting thing. I've changed my targets to 15 points target, 30 point stop. So $3 stop, 15 point target. And my second entry, my limit entry is at -$1. So the way it works is I'm entering in, I have a stop at 3. Then if I have, if I'm coming in on the second stop, the whole stop essentially moves to -4 from original position. And everything is plus $1.50 from the second entry. So when I'm doing gold, my risk is I lose 80 and I lose 110 if I get blown out completely, and my win is 30 or 25. So same idea. It's sort of a 1-to-3 risk-reward ratio, right? Those of you guys who really want to learn this, obviously, come to my coaching, where I will describe all of this in a lot more detail. But here, I just sort of show you how I trade, right? So here's my coaching link. We'll be doing it on Thursday. I'll explain to you in full detail there, and I'll try to create the PDFs and everything else. But the point being is, I do this all the time on my bet size, and then of course I do it. You can see it over here. Let me go into Tradeovate, and then it will switch over to wealth charts as well, and we can trade this. But you can see, I do this across all my accounts, right? And by doing it across all my accounts, only one account got blown out. Everybody else is net positive, and I'm just going to keep growing that. And this, I think, I'm very confident by the end of the day, I'll bring this back to even, and so all my accounts grow by putting my basically putting my P&L into a distribution mechanism. Because yes, when you're like 5-to-1, generally that means 5 out of 6 trades are going to be positive, and that means 5 out of 6 accounts are going to be positive. And that's how you run the whole thing in a very intelligent fashion, both as a risk distribution mechanism, as an optimal bet mechanism, and as a signaling mechanism, right? So the only open question is, do you take counter trend trades or do you take trend only trades as your structure? That's it. Nothing else you're really going to be doing on this thing. So sorry, I dumped a lot of information on you. I'm happy to answer any questions, see what you guys have to say. Let me know. Are we just looking now? We'll be looking for ideas. We're looking at, right now, both gold and NAS are positive bid. They're both positive trend, but they're struggling a little bit. We don't have any neon greens. Gold ran to, my bread and butter trade goes, session highs, but then it just backed off session highs. Gold, NASDAQ is up down 500 for the day. Gold is obviously inching ran that 4750, has come off. Could maybe even do kind of a double top here and come right down. We're looking right now at gold without it. There's a neon red signal which I'm not taking right now because I'm not that interested in it. But if gold starts dipping below the moving average here, it's going to be a negative trend, and then we can start selling gold on a scalp basis. So give me a yes, give me a no. Let me know what you guys are thinking. like the tone comments. Okay. All good. And we'll watch for trades. Right now, gold returning back to positive mode, but I need a neon green. I'm going to trade gold with you guys. Here, we'll trade gold in this one so you guys can see it if it comes in. And I'm going to do again 2-1. You're going to see this whole idea of 2-1. What account is this? 38. I'm in 38. Okay. Let's see if this works. All right. 2-1. All right. So I am in, and I'm going to buy one under. I'm in at 44.2, 41, 43.2. All right. Now I'm at 43.2. I'm going to put my sells over here to obviously tighten my target and drop my sells over here to widen my stop. Let's see if this thing works. It all does work and it resolves. So that's the tap dance that we do. 1, 2, boom, resolve. So that's like a nice 25, 30, pip trade off this. And the advantage of that, of course, is because the price is just so volatile on these scalp moves, right? We can adjust and improve our price average, and then obviously resolve it. Like if we try to resolve it at plus 15, we would have never hit it. But we resolved it at plus 5 of the entry, and that was perfectly clean. So now, now that account gets really nice and big. So I'm going to switch over to my 40. The only account that I have not touched today is the 30 account. So let's take a look at the 30 account, and then we'll look for trade ideas in the 30 account. And we'll go over here. We'll move to NASDAQ. So NASDAQ on the right, gold on the left. Did not take this NASDAQ trade, which obviously doesn't look like it would have been a good trade. And we'll look for the next idea. I really like the idea of taking NASDAQ longs, especially if NASDAQ starts to run the session highs. So I'm going to focus on NASDAQ as a matter of fact. Let's switch screens so that you guys can watch NASDAQ. This is the execution screen. This is the watch screen. So we'll watch the execution screen. If NASDAQ gives me a second neon green, I want to scalp it out. Yeah, it's definitely Chuck saying it's difficult to jump in front of the SCOTUS. You're probably right. We should probably hold off on the assumption that SCOTUS. I mean, I think probably the prudent thing to do is for us not to do anything until SCOTUS either delivers a decision or they punt again. What do you think is going to happen? I'm actually curious. I think they're going to do the Solomonic compromise of like, you really shouldn't be using executive authority to do tariffs. It's a congressional thing, but everything that he's done so far is under his auspices. But in the future, he's going to have to ask Congress for approval on blanket tariff policy, so on and so forth. This way, it doesn't really piss anybody off. We're at status quo. That's probably maybe relatively positive to market. Although I got to tell you, perfect example of how you never listen to conventional wisdom, right? If you listen to every economist and every person on TV who presumably is supposed to know anything about how economics works, we should be in a depression, 1932 types of depression, given the amount of tariffs that Trump has imposed on the world. And in fact, we're booming. We're booming better than under any quarter of the Biden administration on a GDP basis. Now, I know people are just screaming, prices are high and inflation is this. Yeah, all of those things are true. Those things were true before. But if you look at just simply GDP growth, we're booming. And even if we were just sort of modestly growing, that's a complete repudiation of conventional economics. And that, I think, is the point that people need to understand, that when you're analyzing markets and you're analyzing economics, the single biggest missing component of all economic systems is politics, which is how things really get done. And that's why economists are just such horrible forecasters of the future, because they don't understand human relations. They don't understand how things actually really work. The tariffs were a far milder impact on the U.S. economy, simply because we are the only buyer in the market. So if you want to sell to us, you eat those tariffs as a producer, which is exactly what happened. And that is exactly his point, was to degrade the profit margins of our opponents, of our enemies and our competitors, while at the same time stuffing the coffers of the U.S. government. Now, you can afford to do that when you have the power, and that's the key thing. Will today's stuff be available only for my coaching students? Because this is pretty advanced stuff, and I'm not, I'm not revealing this for anybody. If you're smart enough to kind of catch what I'm doing, good for you. And you don't want a coaching, but if you really want the stuff, it's all going to be available for my coaching, which is right over here. So come in and join my coaching. Also, the pundits underestimate the ability of markets to adjust, and more importantly, the pundits underestimate the ability of who the axe is, as we used to say when I used to be a market maker. You know what an axe is? The axe in the old market making days was the guy who controlled the stock. That is, like Goldman Sachs used to be the axe on many, many stocks, meaning that what they did is where the stock went, right? And the U.S. is the axe in the global economy because the U.S. consumer is the wealthiest consumer in the world. And so we can dictate policy to other people. And that's what people don't understand about economics. It's not about being fair or nice or appropriate or open market economics and stuff like that. It's about, who can flex their power at this point. So we're just chilling right now. I'm not taking any trades. Chuck was right to keep me from basically, following my, like a dog following their tail, because SCOTUS is coming up at 10 o'clock. While, SCOTUS coming up, here's what I want to do. Let's take a look at the calendar, because I want to figure out with you guys, I want to trade. This is a crazy week because obviously we're getting ready for Prop Fest. Tomorrow I'm going to be at Wealth 365. So come join me there. But let's just take a look at what is tradable this week. As far as, I want to see if we have any big events on the, I don't think we have that many U.S. macro events this week. Nothing much there on Wednesday. And on Tuesday, we have PCE. I guess we can trade PCE because that's always a really good thing. Jobless. So maybe Thursday we do a mini marathon. We trade like 8 to 11. So we'll do a double Thursday. And let's see what's going on Friday. Friday's nothing. It's just Michigan. So Friday, I guess Friday regular. I guess the one big day we'll trade this week, in addition to today, will be Thursday. So we'll trade Thursday as far as event goes. Oh, we're popping up. I don't know if market is just anticipating anything, but I love this trade. I would take this trade, and the only reason I'm sitting on my hands is because I'm trying to be good and not run the SCOTUS decision. But if I'm long here, let's just say for shits and giggles, I'm long 60. I'm gonna buy down at 55 if it comes down. My target is going to be, I'm in there at 55. Now my target is going to be 65. Let's see if this trade works or if I was smart enough to stay out of it. So I bought 60, I bought 55s, and now my target is 65. Let's see if it comes into 65 and would have resolved. We'll see. A lot of vol in front of it. Yeah. You can see a huge amount of vol, right? It's a lot of vol to absorb. As we're sitting in front of SCOTUS. And it's probably wise that Chuck kept me away from scalping like a monkey on steroids. But 65 is a target. We would have been alive in this trade. I probably would have just blown out of this trade now because I didn't want to be in a position, but it hasn't quite reached 65. So if we're watching this trade on a paper basis, boom or bust here. We're in at 55. The stop was 35. So it didn't hit 35, but didn't hit 65 either. And we may be stopped out on this trade. 36, 36, 35. We're stopped. Would have been stopped on this trade without hitting target, which is a good reason why I did not go for this trade before the SCOTUS decision. See, there's a lot of choppiness. You don't want to be in front of that. Yes, the whale is also like a term of art in the markets, which is the whale is the guy that has the biggest bankroll. It's basically who's got the biggest bankroll, who therefore can control the flow. Tomorrow, by the way, at Well Charts, going to be super interesting conversation because I'm going to talk about momentum as a philosophy, as an academic principle, as an idea, and why momentum is such a powerful trading structure, and why it's almost never, it's just unbeatable. Like it doesn't matter, it can never be beaten out of the market, out of the efficiency market. It's the one thing that every efficiency market theorist, including Fama, have admitted contravails their whole idea. In other words, it works. That there is no, if in an efficient market, no strategy is supposed to work. But this is the one strategy that does work. And I'll explain why I think it actually works consistently across 1 minute timeframes, 1 day timeframes, 1 hour timeframes, 1 week timeframes, 1 year timeframes, so on and so forth. So come join me at Well Charts 365. Please make sure you let me. It's 365. Oops, 265. 265. There we go. Oops. I can't. Sorry, guys. I can't type. Okay, here's the link. If you haven't signed up, please come sign up for the show. All right, what do we got? 5 minutes to the possible SCOTUS decision. I'm going to let's put up a couple of tweet decks. Let's see what they got to say. Let's see if the news tweet decks have anything. So Financial Juice, Investing Live. We'll see what the Did you guys watch the title game? Yes, I didn't watch the title game, but I did see the Mendoza's run into the touchdown, for the touchdown into the end zone. It was really good. And Ben says it was a good game as a neutral observer. Me too. I had no horse in the game. All right, 3 minutes to potential ruling. Not holding my breath, but we'll see. We'll see it in the price action too, of course. But no reason to pop around right now because it is very clearly very choppy. Markets are very jittery and uncertain as to which way we go. What do you guys think is going to happen on SCOTUS? You think it's going to be like a split down the middle decision? Curious. Yeah. Two more minutes. I'm going to put myself to, in addition to this, what happened? Oh, that's an old one. Ignore it. What I want to do this, I wanted to do, where's my reading? Reading, financial juice. Excuse me. Oh, God. Sorry, guys. Taco Tuesday. That's really cute. "30 seconds left." I'm just trying to see if anything is going to hit the headlines here. Thank you. Somebody says punt again, most accurate astrology. I kind of agree. I think it's probably going to be a punt. Let's see. 10 o'clock. Supreme Court on tariffs, tentative. Tentative it is. Nobody's going to dump U.S. assets. Like, this thing that amazes me is, what are you going to buy? Shitty European bonds, Japanese JGBs, which are crashing. You know, we're still the predominant yield, and we pay back. Like, it always amazes me how people, you know, scream about this without understanding that it's a circular firing squad to sell U.S. assets at this point. The fastest growing, largest economy in the world, with the biggest guns. What? You going to sell that? What are you going to buy? You could wipe your butt with European paper right now, and you would do a better job. You know, I'm always amazed how people just create conventional ideas that are inevitably wrong. All right, Supreme Court still holding off as usual. I think looks like you were right. I see nothing moving. So, you know, we kind of just trapped now. What about the debt? Everybody has debt. All the advanced European, and Japan has 3 times the debt of us. England has like 4 times the debt of us. And none of them have the capacity to really pay for it, right? So it's kind of a moot point. All right, what is this? Are we starting to move down, move up? It's very hard to. It looks like everybody's just pre-positioning, right? We're starting to see movements on the charts. Pops and drops. Again, if we start hitting session highs on on neon greens or session lows on neon reds, we got to go with it. We're going to go in the trade. I'm going to assume that the news is, you know, hit the markets. Nothing going on. I guess. Sorry, I'm looking at financial juice. 10:05, still no ruling, nothing. I guess we're all going to wait, and 15 minutes later, they're going to say Supreme Court not doing anything, or maybe Supreme Court waits 15 minutes before they make the release the news. So we're in a period of suspended animation. By the way, gold, I don't know. It's an interesting question. Gold, let's say the Supreme Court upholds the tariffs. Does gold go straight up to 4,800? Could be. Gold could be the absolute insane trade of the day, and in many ways more so than equities, right? On a kind of a fear trade where they just sweep everything on the ladder. We'll see. Again, gold is just inching towards session highs. So let's switch around. We'll make gold our primary focus here. NASDAQ our secondary focus here. Which account am I in? I'm in 30. All right, fine. I really don't want to take trades right now because I just feel like every trade here is a fake out. But if we start hitting session highs off neon greens, then you got to believe that there is something significant afoot. So I'll hold off until we get a movement. Remember, in gold, I'm 15 target, 30 stop, 1 down. So if I buy at 48, I'm trying to buy another one at 47. Again, with a 30 down and a 15 target at that point. You guys saw me resolve that trade earlier. That's basically what I'm trying to do. If I get the chance, that's the technique I want to use. Nothing going on, baby. Well, it may gold drop like a stone if they contravene the tariffs. I don't even know what gold reaction would be in either way. I mean, I kind of feel that if they support the tariffs, gold soars. But so far, we have still no news. Session highs are around the 456. You can see it on the rectangle here. Session lows at NASDAQ are around 225. Everybody just putzing around. Gold starting to soar. Now starting to drop. Is there a release? Supreme Court doesn't rule on tough shares on Tuesday. Okay, so I guess we're done, right? Now we just trade the price action. So the news flow is done. Now we try to trade the price action. Okay. I'm going to take the Equities skirting down. Gold is kind of skirting down. I'm just trying to watch. I don't want to put myself into the middle ground here. As I said, if we take session highs, great. If we start taking session lows, maybe a trade. Right now, we're sort of in the middle ground. The market's still confused and still trying to see if there's any further news to be squeezed out. But so far, no. All right, gold seeing a little bit of a sell-off. You were correct, right? Supreme Court punts. I think they're going to punt like all the way till the midterms. What's the holdup? This should happen. Again, you assume that you're making an economic argument and I'm making a political one. They don't want to make a decision that could be a bomb for the markets, one way or the other, right? Here's the thing. So Trump instituted his tariffs, right? Everybody's screaming that it was like the worst thing. We're going to go into depression. We didn't go into depression, right? Nobody got hurt. So the Supreme Court is like, why do we want to fuck around with this right now and make essentially a legislative move when the markets are like, if the markets were in a free fall, I guarantee you, if we were in a free fall, NASDAQ is down 2,000 points, unemployment at 6%. I guarantee you, Supreme Court would be like, no way, tariffs not legal, blah blah blah. But now they're like, what if we rule on this and it has a immediate impact on the markets? People are going to think that we're political. Everybody's trying to cover their asses, in my opinion. That's how the world works. So they just, don't want to come out until they absolutely have to, where their opinion is going to have the least amount of impact on the market. All right, so maybe is it a relief rally at this point? I can't even tell. I'm looking at gold. I'm looking at NASDAQ. Nobody doing anything. Sound like they're not doing their jobs. It depends on what you think their job is. You think their job is justice and security, or you think their job is to, maintain the status quo? Not much going on here, so I am not doing anything because we have no signals. Again, in order to have a trade, we need signal generation. And once we have signal generation, then we have bet size execution. That's what we're trying to put together as two pillars of our strategy. And you can see that sort of, on a gold, we're still kind of predominantly bullish, but losing that bullishness. On NAS, it's just chop city. You might as well throw darts up and down. This is what I call, the monkey dart market, where the monkey is going to out earn you all the time because it's purely random price action, up, down, up, down, up, down, right? So we have like zero abilities. All right. While I have you here, I'm going to give you a little treat. All right. You guys want to, I told you, I created like a whole bunch of really cool setups. You guys want a really cool setup? It's not on the charts yet. It's something you gotta watch on the eyes. But it's a really, really cool setup. I'll share with you because I have no signals with you right now. And it's something you can do at least once or twice a day in either one of these instruments. Let me actually go to so even if there are signals here, they're kind of bullshit signals. I'm not going to take them for right now. Let me take you to a full chart, and you guys tell me what you think. This is I really love this setup. It's rare, but it's quality. So I'm gonna. You don't have this because it's just experimental on my charts, and I'm going to compress it here. What is this? Oh, 1. Yeah, okay. Perfect. So let's use my trusty magnifying glass. This is a very cool setup. In this case, actually, this did work barely. In this case, it just barely. Let me find you a really good example of where this works. Okay. Yeah. Today was a really shitty day in all of this. It sort of worked here too, but also kind of barely. Let me find you a good clean example of this. Oh my God, I can't even find it. All right, this is terrible in this. Let's try gold. Let me see if I can find you a good example of this in gold. Oh, why is this not working? What is this? Oh, hold on. I think I know what it is. I don't know what it is. Okay. Here's a good example. I just want to show you like a classic example so you understand the structure. So there's something really, really cool that we can do with our setup that allows us to buy beautiful kind of buy to dip, sell to rip strategies within trend. And the idea is really kind of simple. You have, it can only be done, in my opinion, on the first crossover, like the first signal on the crossover. So you have an 8 crossing over 200, right? On the 8 period SMA, if the slope is green, so it's a positive slope, but the candle pierces and closes below the slope on the first time, that is a dip buy. You buy this, and obviously, you can do this with actually larger stops and targets, but like if you just simply use this, 3-point stop and then another point stop, you could resolve this very easily. Like this thing drops, I think this was 42, 37. It's like a 5-point stop, and it goes all the way up to like 55. Like this is kind of a setup you can use where you could use a 10-point stop, 5-point target. Boom, in gold, it really, really hits. But it happens, just once or twice on the crossover. Here's a good example. It crosses over to the other side. We have the opposite example. This is really, really good in gold. I love this in gold. We have the race through the moving average, but the slope is red. So you have a contradiction. You have a divergence. And that divergence is a super powerful signal. You sell here, 10-point stop. You don't need a 10-point stop, but it drops like 5-10 points against you. So it's a really, really cool setup for those of you guys that are playing around with it, because I think it doesn't happen a lot, but when you get the moving averages crossing over, you start looking for that divergence signal. It's usually going to be a really great value proposition to either sell in a downtrend or buy in an uptrend, buy at a dip or sell in a rally. And usually it's very accurate because that contradiction between slope and price action gives you a good signal that, the price action is just temporary. You guys understand what I'm saying? And it's all possible with our indicator. All right, NAS finding a little bit of support here. I want to see at the session lows. I have a neon green trade here. So this holds. Let's trade NAS. It doesn't really hold so far. But if I get a neon green here off the bottom, it's worth a shot. Good morning, everybody. Who's joining me from some exotic places like Indianapolis, Indiana, or I don't know, Ethiopia, someplace crazy. Okay, NAS actually goes red. So go green to red, and it's actually a neon red. I kind of want to sell this. And I should sell it at 2. And now my entry is 63, and I want to be at 68 on my secondary entry. All right, so I'm in at my secondary entry. We're all going to move all of our buys over here to the close move, and let's see if we can resolve this. And we resolved it all to the downside, okay? I know it was a little sloppy because I'm talking and chewing gum at the same time. But again, sort of the structure was we sold 2 at the tip. We sold 1 at +5. We bought everything back on the dip down, okay? On the idea that and the reason why I kind of decided, hey, this is probably a pretty decent signal to the downside is because we had a big green rally, and that thing just totally reversed. Not only did it reverse, but it gave us a neon red signal, meaning lower lows, right? So when I have that kind of a signal, you know that I have a high confidence that it's going to resolve. Irvine, California, very exotic. Nice to have you guys. Nice to have you with us. I always love the West Coast folks. I love to trade the markets from the West Coast. I mean, I will wake up at 4:30, go to the Starbucks in Westwood, and since it's open like super early, and just trade from there. I used to love doing that when I was in LA. So pretty violent move back up. They kind of test the lows. And the reason, by the way, why this kind of a technique is good is because you see we are cutting our take profit by half the distance and increasing our ability to resolve the trade. That's the whole point. The whole point is we're increasing our ability to resolve the trade against a pretty violent, a volatile move here, right? Had I waited for the full 10 points, it probably would have retraced against us and stopped us out on volatility, unless we were willing to go larger target. By the way, here's a cool thing. I totally forgot. Unbelievable application of the indicator, which I totally do not use, but we should. And let me show this to you. We should really do this. We need to color the volatility candle, and we're got to make the volatility candle. This is range. Where's the volatility candle? Candle volatility mode. The candle should be like 30 ticks. I think if this was this, would that have colored my candle? Oh, is there something going on? Do we haven't seen news? Or is this just a big move? Let's go big on this. Buy. I'm at 28. I'm going to buy at 23. And I'm done. I'm done on all my stuff, and I'm going to get rid of my stuff. So in this case, I just followed the flow. When it was just such a huge, big move, I don't know what happened. I don't know if we got any news. Okay. See, they are dicking around. They are just jerking you off so badly. Look at this. No wonder the market's kind of rallied. Nobody wants the news. Nobody wants to have, a clash of the institutions. Oh, that's just so funny. Okay, so we got no ruling till February 20th. So basically, they totally kicked the can down the road. And that's why, and I followed the price action, right? So this is a good example. A lot of people always say, you got to trade the news, technicals suck, so on and so forth. And my attitude is yes and no and no. What I mean by that is news absolutely drives price action. If you think technicals drive price action, you're a moron. Nobody's looking at a squiggly piece on the chart and moving prices around based upon that. Technicals simply reflect price action. They reflect people's opinions. But the great thing about technicals is that technicals show you what price action is doing, not what you think it should be doing, right? And when you see flow like this, then you know the price action is flowing. You can figure out the reason for it later. Sometimes it kind of works with you where you see the reason right away and you see the movement, and it all jives together. But my point is that technicals are, as long as you don't take technicals seriously, as long as you don't think that technicals is what actually drives price action, they're not designed to drive price. They're designed to read price action, right? It's like when you're in a room full of people and somebody who's sort of highly emotionally intelligent is in that room, they don't need to know what the real reason why somebody is upset or somebody is angry or somebody is happy. Highly emotional people can read people's emotions without understanding the underlying historical, psychological, personal reasons for those emotions and adjust those emotions on the fly. That's what makes them so effective in social gatherings. Technical analysis is kind of like being having an emotional IQ. It's all about reading the emotions, not necessarily understanding them, right? Analytics is what understands emotions. So when you sort of understand that and you don't take technical analysis too seriously, but you do appreciate its value, it definitely helps you make those trades. So gold now is, starting to crash off this news, a little bit of continuity. We'll see if the patterns last. But bottom line, today was a pretty good day for me. I got to run. Unfortunately, guys, I'm so sorry. This is such a annoyingly busy week for me. But let me show you. So 7 accounts, only one of them is red. This one, if I have a chance, I'm going to work on this one when I get off the screen and see if I can bring that back to green. But everybody else, nice green. There's like $7,800 of just complete bullshit, just total bullshit as far as me trading. I'm trading 1-2 micros, and each one of these accounts is growing nicely, right? And that's the game plan for everybody to get funded in an intelligent, risk-controlled way. So my last pitches to everybody. Everybody go buy some Apex accounts, right? Number 1. Number 2, which I put over here. Number 2, everybody come see me at Wealth Charts. I will put this up tomorrow, but obviously, record, get yourself into Wealth Charts because I'll be talking about the academic proof that momentum works and why I think it's really, really cool. By the way, I think this picture is like 50 years old. Jesus Christ. I do not look like this, as you can see right now. And I wear that suit I literally wear that suit 3 times a year these days. And what else did I want to tell you? So Apex, this, and and Prop Fest. And Prop Fest. That's it. We've got so much shit going on here. Go register for that. Okay. So everybody have a great day. I hope you really, really enjoyed it. Really, really a lot of fun. Again, the betting technique, it takes a while to kind of master it, but I think you guys are going to be really, really pleased with it once you put it into action. The betting technique of 2-1 really creates, if you assume that you're doing the right thing. I mean, it all underlies on the assumption that neons have continuity, right? If you don't think neons have continuity, then of course it's a bullshit idea. But as you can see on the chart, 6 out of 7 times neons have continuity, right? Continuity means that there's further upside action, there's further downside action. If you assume that neons have continuity, then this kind of a 2-1 stacked approach is really, really cool. Because what it does is it really amplifies your P&L much faster than just doing a single entry structures. Okay? So everybody have a great day. Enjoy. I'm going to run, and I will see everybody tomorrow, regular time. I'm going to post a link, regular time on trading, and then Thursday we'll do a mini marathon at around 8 o'clock. All right, everybody be good. I'll see you guys later. Bye-bye.